We're going to continue now with other news making headlines as South Africa navigates a challenging economic landscape. Pressure mounts to balance domestic growth with mounting global uncertainties. And so today we're going to be exploring how South Africa can position itself as both a resilient economy and a credible geopolitical player following the US tariff imposition on key South African exports, the ongoing trade wars, and really what's at stake. You've caught between the crossfires. We're also edging closer to the G20 summit taking place in November. Dale McKinley, political analyst, joining us to weigh in further. A very good morning, Dale, and thank you for joining us at this hour.
Good morning, Liesl, and good morning to your listeners and viewers. It's a pleasure.
There's a lot to get through, so let's see how we can unpack all of this. I think if we start on the domestic front, just in view of the recent interest rate cut, what impact that has on ordinary South Africans, given our high unemployment rate, but also just the cost of living at large. There's also risks of inflation rising again if global energy prices climb. Talk to us about those dynamics that are unfolding.
Sure. I think the lowering of the interest rate was expected.
Yeah.
This is an area where I think it's been called for quite some time to get it down even further, because obviously the constriction of credit and capital in the markets affects mostly working people and poor, those who don't have money, those who can't save. And I think we've had what we call a very strict monetary regime from our Reserve Bank, which is looking at taking that inflation rate down to the 3.5%. I think in the context of these headwinds that we're experiencing internationally, the domestic sort of static nature of our economy, we need to lower it even further. We need liquidity in the economy. We need people to be able to access credit. We need some better consumption. And it's even going to be more the case, even if there is a little bit risk of a little bit more inflation. I think that's an acceptable risk in the context of an economy that's been standing still for the last 3 years.
And so building that resilient economy, Dale, I mean, we obviously have to then widen our view and look at what's happening globally, the significance of the potential impact of now the US tariffs, what they have on South African exports. But even if we're having to look further about the alternative markets, the viability of that, for affected products, if the US access becomes a little bit more restricted, what's coming through on that front? Which sectors now have the highest growth potential in the next 2 years, if you're going to look at the optimistic and positive side of this?
Well, I think, first of all, we need to remind ourselves what's exempted from the tariffs. Sure. So we have a lot of our critical minerals are exempted. The steel and aluminium sectors are also exempted. Some of the precious metals and critical minerals and other things. So they're going to continue, and we're going to continue those exports. Those need to be expanded. They need new markets. In relation to our citrus and agriculture and also automotive, which are going to be the hardest hit by the tariffs, we simply need to find alternative markets, and they're there. It's a question of making sure that we've got a plan. Let's remember that the United States is our third largest trading partner. The EU and China are the two largest. We still have a lot of space to find new export markets in Asia. And then there is our own continent, which is, of course, always the laggard when it comes to our trade. So South Africa is the biggest trading partner of many African countries. But again, there's space for having a proper customs union on a continental basis, more free trade areas, taking down those bureaucratic barriers. So there are things that can be done. We just need to move fast, and we need to move creatively, and we need to prioritize these new opportunities. I think there's a feeling that the government's dragging its feet a bit.
Okay, so speaking about leveraging of the AFCFTA to offset these global trade disruptions, I even want to look at the benefits and even the risks of BRICS nations. Talk to us about deepening ties on that front. What comes with, with that? Obviously, the benefits and the risks as we explore possibilities and probabilities.
Sure. So I think obviously Donald Trump hates BRICS. So we have to understand, first of all, I think we need to be clear on this, that much of this and the tariffs that have been put against South Africa are political. They're politically motivated. They have nothing to do with economic realities. If you look at all of the different tariffs that have been put on other African countries, it's 10, 15% mostly. We're the only ones, along with Libya, that got the 30%, and that's about politics. So we're not going to change Donald Trump's mind, I doubt it. We're not going to be able to cut a better deal. So we need to then look at, for example, as you mentioned, other possibilities. BRICS becomes a possibility, not because it's a BRICS anti-American sort of bloc that's going to establish different kinds of things, but the trade possibilities with India in particular, with China, less so, I think, with Russia and possibly even more so with Brazil. But then the other 20-something countries that have joined BRICS in the last year, there are again opportunities there. So it's about strengthening the trade relationships as opposed to the political side of things. And then with the African Free Trade Continental Area, it's about African countries getting real. There's too much bureaucracy, there's too much nationalist sort of sentiment about trying to cut bilateral deals with different countries. And what we have is we have regional blocks, as you know, SADC and others, but we need to come through in a continental area. And there's much work that can be done. And the AU needs to get off of its you-know-what and start really prioritizing these kinds of trade negotiations. Because if we don't, Africa is going to remain picked off. Donald Trump will pick off, and the United States and the EU will pick off all of our countries and cut deals with each of us that we feel that are in their own best interests, and that's not going to help us.
And, Dale, thank you for speaking to that, because I even wanted to look at the tensions between the US and China, and perhaps how directly or indirectly that will affect South Africa's economic position. I think I'm asking this because we're looking at how South Africa could even be caught in the crossfire of sanctions or trade disputes between these global powers if push comes to shove. How would you weigh in on that front as well?
Sure. I think when it comes to China, Donald Trump's bark is a lot worse than his bite, because I think he understands that without China, the United States economy is going to be in trouble. And I think that's becoming, those chickens are coming home to roost already in price increases in the United States, blockages within particular imports and other things. So my sense is that as long as our relationship with China economically grows, that's going to be okay, in the sense of we're not going to get punished for example, having more exports or China cutting more deals with South Africa or the SADC region. I think where Donald Trump is going to be very, very watching very closely in the Trump administration is if he feels as though, for example, the South Africa and China are getting closer geostrategically, militarily, politically. If the currency issue with BRICS, establishing a currency that's going to rival the United States dollar, trying to cut trade deals collectively that would impact on the United States. So his lens is a political lens. As long as we sort of, and here's again, let me just say this, is that many people who've criticized our government with not responding directly to Trump and not cutting a better deal, I think are misunderstanding the nature of the Trump administration. They're not interested in cutting a better economic deal with South Africa. They're interested in South Africa bending the knee to the bully, to the person who Trump wants people to basically treat him as the king and basically say, yes, you're right, yes, we'll do whatever you want. If we're not willing to do that, and I hope we're not, then we're going to have to find these kinds of ways. And that's where China is one of the players. It's not the only one. So it's not about over-reliance on the Chinese market or, for example, the Indian market, but a diversification and a use of that economic space and trying to avoid some of the larger political questions that might upset Trump in that case. Yeah,
that's obviously unfolding and playing in, day out, and we're monitoring those developments. I'm even just looking at some of these strategic points you mentioned and how the instability in the Red Sea, some of the other shipping choke points, how does that also affect South Africa's imports and exports at this point? Just if we're looking at that entire value chain, given the state of our economy and what's at stake.
Sure. Well, of course, I mean, in terms of imports and international trade, it makes it more expensive. Many ships that are going to it would come through the Red Sea, that would come in through the area, are now going to come around our continent. That has a good and a bad possibilities. First of all, I mean, the negative are the increased prices, the increased unpredictability, the time frames, and the delays that's going to take. On the other hand, it might, in the longer term, if that continues to be the case, if that bottleneck there in the Middle East continues to be the case, it might make we go back to that time period where the Cape and the routes around Africa become much more geostrategically necessary for many, many countries. So there's going to be an extra consideration about keeping close relations with a country like South Africa and not isolating us to the extent that might otherwise be the case. So, yeah, I mean, there's a little bit of yin and yang there in that context. But I think the larger question is, of course, energy issues and energy imports, which we're very heavily dependent upon. As long as the Middle Eastern situation is unpredictable, you're going to have a situation where we're going to be going up and down like a yo-yo with energy prices, and which is never good for predictability and investment.
Yeah, and I mean, it's also looking at the roles of SOEs versus private investment. We're edging closer to our G20 summit as well. So what is going to be driving investor confidence domestically to paint that picture? Dale, we've run out of time, but thank you for weighing in on some of those domestic and global issues. Dale McKinley, political analyst, weighing in on those geopolitical dynamics unfolding and really South Africa's position within that ever-evolving sphere.